Tesla stock TSLA. I'm selling it, but I'm selling it in a different way. I'm not going to take an outright position. What I'm going to be doing is selling options on Tesla. TSLA stock, of course, moved up higher today despite a slew of sort of downgrades where analysts are sitting there saying they're going to have less deliveries, they're going to have lower revenue and lower earnings. Yet TSLA stock went up. I'm looking at a couple things. Number one, economics. My first and foremost sort of foundation I look at. I'll be using stock options. What I plan on doing is selling calls against TSLA stock for a short period of time. If I can, I'll buy puts against Tesla stock if we see some of the economic data that I'm looking for. Yield on Tesla is really low. It shouldn't be this high. It's speculative. It's always been speculative. But I believe we might see a turn in the stock market, the broader stock market in general, simply because we've gone too far, too high, and we might start seeing some movements sideways, sort of getting rid of the Santa Claus rally. Let's jump in and I'll show you a few of the charts that I'm looking at that's getting me to pull the trigger on Tesla stock TSLA. If you're just finding my channel for the first time, thanks so much. This is a breakaway channel from my original channel, Cannabis Stocks Analysis. Channel's growing quite rapidly. Thank you so much for the comments down below and the likes and follows. What I do, first and foremost, I'm an economist. I look at the economy broadly speaking, then that affects how I make my decisions for my investments. And in this case, I'm breaking that down and looking at Tesla. Here we see, this is just a news clip I got out of, it was the Dow Jones Newswire. I think it is actually Barron's. Tesla stock is rising while estimates are falling. Here's why. Yeah, Barron's.com. We're looking at lower, let's move forward. Deliveries are falling from 2.3 to 2.1. Analysts are expecting for 2024. Another thing, 385 in earnings per share versus 467. That's a huge decline. Yet today, here's the 4-hour bar chart. We saw some movement upward from about 230 over the past couple days up to this point. Now, all through October, of course, bond yields were moving much higher, a little too high. I felt that was a bit of an outlier. Things have reversed, and now I believe that the reversal is a bit too much, sort of an outlier. I still am in the camp that interest rates will remain higher for longer. I continue to look at now the housing market, that we're seeing mortgage demand moving higher. We're seeing some new inventory hit the market, but if price, which it is already, starts moving higher with house prices here in the United States, I don't see the 2% target rate for the Federal Reserve on inflation magically happening. Because of that, interest rates remain higher for longer. The tail end of 2024, my expectations are we see a move lower. In the meantime, bond yields have fallen, stocks have risen. NASDAQ just this week printed a new all-time high. Dow did that, what was it, last week or the week before? So I'm looking at this saying stocks are just getting a little ahead of themselves. During that same period of time, Tesla didn't really follow through as much. You can see some movement in November, but there was a big sell-off after the last earnings report, and so it was really kind of a rebound from that. It wasn't the same in-kind buying that we saw throughout November and into December that we saw in the regular market. So that's really kind of the first foundation. The 385 versus 467 is pretty big. 2.1 million deliveries is another thing. Taking a quick look at a breakdown of Tesla stock, 23.35 billion for Q3. Projected revenue, 118.4 billion for the year. Now this is continually growing in revenue. One of the first things I'm looking for. And so in that regards, Tesla's sort of checking that box. When we look at margins, 19.81 on gross margins, 11.18 on net, and then 11.25. Now the broader S&P 500 prints about, 10.25 for the same quarter, Q3. So you get about an extra percentage point more with net margins from Tesla and an investment in Tesla stock. That's positive. But the earnings and everything else that's kind of compacting everything, it's really a hesitation. that I'm seeing. Earnings per share, here's the quarterly earnings per share. We're not seeing year-over-year growth there. Projected earnings per share 2024. Now here I'm using 3.95. I read a couple places where they downgraded to 3.85. I put that in the first slide for you, but I'm using 3.95 as sort of a reference. Here we're looking at price to earnings multiple, 80. This just sort of iterates how overvalued Tesla is. And the rate of growth of the revenue and profits are declining, specifically profits, earnings per share. And so the 80 becomes a bit unrealistic when you're looking at the broader stock market at where it is right now, just sub 30, I think it is. Here are some things that I'm looking at. And I have some stock options strike prices I want to look at next. But price currently $259.67, earnings per share $3.95. Now I'm using the $3.95 that I found on one website that I use from time to time. I've seen some as low as $3.80. The average seems to be about $3.85. I think I'm being a little generous. Yield, Tesla stock yield, which you take the $3.95 divided over top of 259.67, 1.521. So from a value investment standpoint, you look at that and say, I could earn 1.521% from what Tesla could earn over the course of the next year in earnings per share. Where the price would be, anybody's game. Down below, I show the 10-year U.S. Treasury yield, 10 years trading at 3.915. This is the benchmark investment rate. You start there and you say, okay, can I outperform that? Or if I do underperform it, what do I gain? So at 3.915%, that tends to be a little more secure. It's the U.S. government. The 10-year, you can lock in 3.915%. If the Federal Reserve actually does lower interest rates, your 3.915%, if the 10-year yield goes lower, your price moves upward. So if you sat on it for 10 years or some period of time in between now and then, if I sat on it for 10 years, I would get 3.915%. If the Federal Reserve lowered interest rates, the price I paid for those treasuries would move higher. So I could gain profits there. My risk is far less versus the 1.521%. So when I look at Tesla stock, I see how speculative it is. Here are some stock options against Tesla stock. I have the strike price over on the left-hand side, the date in the center for expiration. These are all Fridays. Price $259.67, and then what I could get if I sold these off. Now I'm looking at the 280s for 29 December. This is interesting because I can grab a quick $1.10. That's not bad. I don't expect much movement between now and next Friday. The next strike that I was looking at was the 285s of 5 January, $2.28. That's interesting as well. Then all the way out to 17 January, 1 month, I could pull in 350 if I sold this. Now, a technician may look at this Tesla stock, and if you look, the 280 level is really kind of a make or break. Those technicians would sit there and say, if it goes up to that level and breaks it, it keeps going. From a value investment, when I look at this, I say it shouldn't even be this high. So if I sold these calls, my expectation is that they expire worthless. And I'm really playing theta. Volatility is increasing somewhat on Tesla stock options. So that's something that works in my favor, because if I am selling these, I'm earning more premium. But I'm looking at the delta, theta, and volatility, vega, when I'm considering this. I think I'll probably do a hybrid of all three of these, selling these, but I really do kind of want to wait until I think it's Wednesday or Thursday when we get the PCE data points. I expect them to be fairly benign. I don't expect any kind of moves too much from the stock market from there. But we have this Santa Claus rally that seems a bit too much, too high. But I did kind of look at QQQ stock, or NASDAQ 100. it's from a value investment, the entire NASDAQ index is yielding about 4.2%, whereas the 10-year yield, again, 3.91. So you're getting about what you need to get out of NASDAQ. So it's not overvalued, it's not undervalued. It's sort of appropriately valued. So maybe the stock market won't move too much off of the data we get this week. That's what I'm also kind of hoping for. Theta. Let it just sit there and do nothing. That's what part of the game with options selling. It's not exactly the safest game at times, but if you spread yourself out like I do frequently, I do all right with that. So here we can see that's that 280 level that I was looking at and the 300 level. I'm thinking we probably don't hit that in the next month. But again, I'm waiting on, I'm pretty sure it's Thursday's data. I might step in tomorrow or Friday, targeting those 280s for next Friday, especially with the holiday in between. So I don't think we see 280 to 300 in Tesla in the next 30 days is kind of what I'm looking at. I definitely don't see it going up too much higher. There are too many analysts who are downgrading Tesla stock with less deliveries and lower earnings per share. Eventually, I think Tesla just takes a dump. Tesla stock is always speculative and too high. But at this point, I'm also thinking, can I flip and with the premium I take in, buy some puts? If we see the 260 breach a little much higher, I may step in and buy 240 puts. It's called a risk reversal. I would still need to see more economic data. I still think that the stock market kind of just moves sideways. That works for an option seller. But once you start buying those puts on Tesla stock, you need it to move downward or you miss out on your profits. Nonetheless, make sure to hit the like and follow button. I'll keep you up to date on what I do with my Tesla stock and short selling this. And I probably will pull the trigger on something this week and the next couple weeks. So I'll continue to update this video. We'll see you in the next video.